In my opinion, the second quarter will be surprisingly strong in the US. We're already 1 month into it, and we're seeing that the the most important service, the ISM and the PMIs, are already correcting higher, but it will most likely continue and be somewhat higher than we currently see. So I think this will take a lot of analysts by surprise, and I think the interest rate expectations have not really corrected to this new reality of a stronger US economy. So the weak first quarter of the US economy is definitely behind us by now, and we should, under normal conditions, see that this will filter into to higher interest rate expectations, and that will most likely also happen at least, 3 months from now, something like that, because by then we'll see that the effect on headline inflation figures from the lower oil prices will begin to fade out again. I think what is most interesting right now is the emerging markets that are finally beginning to outperform MSCI World, and there's several reasons for that. I think one of them is that the Chinese economy is not only stabilizing but actually looking to improve considerably compared to just half a year ago. So the leading indicators for the Chinese economy are turning higher. We see that the money supply figures are virtually exploding. We see that new yuan loans are exploding. We see that the house prices are increasing in China as well. And also steel prices are up by 50%, more than 50% in a very few months. So these are definitely signs that the Chinese economy is not only stabilizing but actually improving quite considerably going forward. Another reason is that the South American economies are also improving, at least from a political perspective. So we're seeing Argentina with a new president. We're seeing Brazil is trying to clean up this whole corruption mess, and we're seeing the Venezuelan economy perhaps not stabilizing, but because they're still quite challenged. But at least they had this election where they are at least moving in the right direction. And then we still probably need some kind of bankruptcy or restructuring of the Venezuelan debt. But in that process, I assume that they will move even further in the right direction. The oil prices has had a very large impact on the emerging market economies. Half of them are basically benefiting from a lower oil price, while the other half is benefiting from higher oil prices. But now that the prices have dropped considerably until January or February, the ones that were challenged by lower oil prices were challenged a lot more than the ones that benefited from it. So that kind of asymmetry has been removed, or is about to be removed, now that we see somewhat higher oil prices at about $44 per barrel. So that's also helping to remove some of the uncertainty in the emerging market segment currently. One of the aspects that could also help propel emerging market higher, that would be consumption, especially in the Eurozone, which the growth rate has actually dropped just slightly in the past couple of months, but it's still keeping at 2.4% nominal, but inflation is around 0, so that's actually 2.4% real consumption growth in the Eurozone. That's actually quite a healthy figure. And at the same time, we see that credit or consumer loan growth in the Eurozone is rising by 5% per year currently, and that should also help maintain consumption at a relatively healthy pace going forward. Another reason is that the euro is still relatively low compared to the US dollar, and also interest rates are quite low, so financing a consumer loan is also relatively affordable at these levels.